Hello, good afternoon. How's everybody doing today, huh? I hope you guys have had a fantastic day trading so far. And more importantly, I hope you've had a fantastic time with these lessons that I've developed for you guys. Since you guys are my students, I really do highly encourage you to post as many questions as you guys can, all right? Make sure you're reaching out to me on Udemy, and I will be 100% more than happy to answer as many questions as I possibly can in less than 12 hours. I'll make sure that I get to you guys in a very timely manner because since you are my students, since you guys have made the investment, it's absolutely my obligation to ensure your success because you guys are now officially my students, believe it or not. And I have not taken any students ever, and I really do hope that you guys have enjoyed the material thus far. So let's do a quick summary of what we have covered so far in the previous 6 lessons. Welcome to lesson number 7, where we'll be going over what are technical indicators and how are they used. Okay, this is going to be more of a general, just talking about technical indicators, the different kinds of different things that people use as well, and especially what I personally like to look for in technical indicators and the reason why I'm using them myself. So far, guys, we have talked about the introduction class, which covered a lot of the terminology. So now you guys should be able to converse with me to some extent, right? Whether you're new or a beginner or an intermediate, I'm sure that you guys are having a lot more familiarity with a lot of the lingo that's used. Imagine coming into the scene, guys, and not knowing anything at all about what anyone's talking about. Imagine watching my Elliott Wave videos for the first time as a very new trader. It'd probably be a little bit overwhelming, right? But now you guys know a lot more of the common terminologies used. So I'm very happy that you guys are graduating to a different level of just from beginner and newcomer now. So what separates the superstar status from the mediocre? We talked about that. We talked about how it was basically dealing with your emotions, right? Emotional stability is very important, and we factor out the emotions by making sure that we stick to our risk management, right? Risk management is a way for us to minimize our losses because we want to make sure that we protect and preserve our capital and our money that we've made so we can actually grow it as well. And then thirdly, we have to make sure that we trade like a casino because we don't care about the single wins. We just care about winning well over time. And when you think of trading like a casino where you will win some, you will lose some, and it's all about odds and probability, you guys are going to have a much higher success, especially when you add lesson 3 into this as well, where you're focusing on dollar cost averaging. When you dollar cost average and you ladder your buys, it ensures that you're not stuck in one particular position, and it allows you to add more if it actually gradually goes down. But if it doesn't go down, then it allows you to actually add more to your position on strength. Then lesson 4 was definitely one of my favorite topics there, reading the level 2 order book, understanding what the bids and the asks are, and also just being able to read in real time what these momentum changes are. So lesson 5 was also to scare you guys. It was to instill a lot of fear, which is what I wanted to do. I wanted to talk about what is longing, or to go long, what is too short, or shorting, what is margin trading? What are the risks? And what is leverage trading as well, right? And I wanted to make sure you guys understood all about the liquidation process because to me, this is incredibly important for you guys to understand the risks. And I really don't recommend that you guys even leverage, okay? Definitely don't recommend leveraging whatsoever. Stay away from it because what we want to focus on is actually making sure that we focus on good trades. Last thing you guys wanted, there's this side here that's focusing on making money, and the better side here is focusing on making sure that you guys are taking good trades. Because when you take good trades, the profit will naturally roll in. So always focus on playing the game right, not winning. If you focus on playing the game right, you will naturally win as a bonus, okay? And then in the previous lesson, we talked about the necessity of charts, right? Which was how to customize trading view, right? Customizing trading view is a very important and crucial step. So let's get into this, guys. Let's get into lesson 7, and we're going to talk about what are technical indicators and how are they used. So let's get into this, guys. Let's go over a lot of the different types of common technical indicators, okay? When I first started out trading, guys, you know what I did? I read a lot of technical analysis, okay? I read tons of technical analysis, and I always wondered, what does this stuff mean, right? So I kept reading through them, and it eventually got to the point where I didn't really understand what it was actually going to mean. So then I said to myself, all right, every single time I actually don't understand what a definition is, I'm actually going to Google it. This way, I'm going to have a very clear understanding of what the heck they're talking about because I wanted to understand the actual lingo. And now it's very rare for me to read a technical analysis and not understand exactly what they're talking about, right? So let's go into some formal definitions first of all, okay? So let's go to Wikipedia here, which we're going to in just a second, and we're also going to go to Investopedia. This is actually a wonderful site for you guys to actually check this out. Just in case you actually don't know a lot of these definitions, you can go here, type in the definition, and it will give you a really good definition of what it actually is. So what is a technical indicator? Well, a technical indicator, they're derived from mathematical statements or mathematical calculations based on things like the price, based on the volume, right? And this way it gives you a way of analyzing historical data, right? That's what it's saying right here. So technical analysts will use these indicators to predict what the price is going to do. So some common ones are, for example, relative strength index, right? Money flow index is not really used. Stochastics, which we're not going to go over because it's not what I personally use, right? MACD is something I absolutely use all the time. That's moving average, convergence, divergence. Bollinger Bands, I personally don't use it myself, right? So we see these technical indicators. For example, one very common technical indicator that we use is relative strength index, right? And we're going to go over so many different kinds of technical indicators. Now, I want to talk about the philosophy and the principle of what a technical analyst actually is, okay? So let's talk about this right here. Let's talk about the characteristics of what is a technical analyst versus a fundamental analyst, okay? What a fundamental analyst actually does is they focus on doing things such as they'll focus on things like what is the coin doing, right? What are they trying to develop? What product are they actually making? How are they marketing themselves? What are kind of timelines that they have where they're going to release a product, right? Did they just make a new partnership with a different company, right? That's these things are really important. For example, just random example is when, for example, Ripple, right? They actually formed a partnership with Apple, right? Apple actually realized that, hey, Ripple's transactions time is actually really cheap and very fast as well. And of course, Apple is a big adopter of modern types of technology. And that's why Ripple actually ended up soaring in January to much higher highs than other coins, despite Bitcoin dropping. So, for example, that would be a form of fundamental analysis where we're looking at what is the company doing? Did they form a partnership with anybody, right? Did they do something really new? Like, are they about to make a really large announcement sometime very soon? So fundamental analysts, they don't really look at technical data because they look at the external factors outside of that, right? That will actually give them an idea of is it a good time to invest or not. Now there's big arguments in the world between technical analysts and fundamental analysts, right? But a technical analyst, just to read you guys the formal definition, right? They employ models and trading rules based on price and volume transformations and indicators such as relative strength index, right? So these are very important to understand. So in contrast to fundamental analysis approach to look at security or stock analysis, right? We don't really do things like looking at, hey, what is the company doing right now? Are they going to make a partnership or anything like that? So our principle lies in here, okay? Our core principle of technical analysts is that we believe the market's price, it reflects all relevant information that impacts the market in that specific price, right? Or in the chart. We believe everything is seen in the chart. A technical analyst looks at the history of a coin or a cryptocurrency here rather than external things such as economic, fundamental, or news events, right? We believe that the price action tends to repeat itself and that there's patterns and there's behaviors that are identifiable. So we like to look at the past data that will actually give us a really large clue to what can happen in the future because we personally believe, guys, it's our principle as a tactical analyst. It's our core belief that everything is easily identifiable based on price trends and conditions in the market, right? So we personally believe that trends are very easily identifiable, and we use these technical indicators that tells us a story. So make sure you guys are understanding that this course of mine is geared solely towards learning how to do a technical analysis rather than fundamental. Now, yes, I do also read news. I make sure that I read the news in terms of, hey, what is Bitcoin doing? Did they form some partnership? Is there some big announcement? Is there a fork? But personally, I I trade based on 90% technical analysis and probably 10% fundamental analysis. I'll still keep up to, CoinDesk or whatever website, for news publications, just to make sure I'm caught up with all the relevant news. But at the end of the day, I will solely rely on these technical indicators that's going to paint a very vivid picture for me. So, the best way to think of a chart is to see it as something that tells a story, right? It tells us a story, and these tactical indicators are actually going to be used to give us a gauge of what is happening in the current market. By taking, and these indicators will take calculations. They'll do mathematical calculations behind the scenes for us that can identify some common trends. So let's talk about a technical analysis that I just Googled really quickly to see what they're talking about, okay? Let's just talk about it very quickly. This one was from just yesterday, for example, on May the 4th. So let's talk about some of the things. Let's read it out loud together and let's actually go over it one by one. Excuse me, I have to cough really quickly, okay? All right. So what they're saying here is Ethereum price jumped higher sharply and moved above the $780 resistance level above the US dollar, right? So here they're talking about a resistance, okay? So what is a resistance? Let me show you guys what a resistance is, okay? A resistance is basically a price where it's having a lot of trouble breaking, okay? Think of it as an actual resistance, a place where it's having tons of trouble breaking. Now, what would a support be, guys? A support would be, if you said it right, a support is a place where the trouble has a lot of trouble breaking on the downside, right? So we're also going to go over some more terminology just to make sure that you guys are familiarizing yourself with it, and so we can exercise a lot more of it as well. So there is an ascending channel forming at $760, right? What is a channel? Okay, they're talking about a channel like this right here. This is what we call a channel that's moving like this. Oops, I drew it a little bit poorly there. So this is a channel, just to give you guys an idea. So think of an actual channel, okay? Think of it as two parallel lines that are actually moving inside of it like that, right? That is what we call a channel. So let's go over some more things that they're talking about, right? Let's go over here now. There was a solid increase in buying interest as Ethereum price moved above the resistance level. Yesterday, we discussed that the price could move above the 725 level. If not, it if not only broke the 725 level, right? Or sorry, it not only broke the 725 level, but moved higher by more than $50. During the upside, it broke $765 and 780 resistance levels. So they're not really talking about any indicators here yet, okay? At the moment, the price is correcting lower from 789 but remains well supported. So what they're talking about is the price moving downwards, but it's finding a floor. Think of support as a floor, right? That might hold the price at that place. And think of the resistance as an actual ceiling where it's having a lot of trouble breaking through it. But eventually, all ceilings do get broken, and eventually, all supports could break through as well. But sometimes we find a support or a floor that it simply cannot break through because the floor is just too strong. Okay, so let's talk more about some technical indicators here, right? So for example, here they're talking about Ethereum price traded recently below this 236 Fibonacci retracement level of the last wave. So they're talking about Fibonacci retracement, right? And this is more so just an introduction class to what charts are, right? Or what technical indicators are. So Fibonacci is actually further down, guys, right? We're going to be talking about Fibonacci retracement and Fibonacci extensions, level 15 and 16. But to give you guys a very quick overview of what Fibonacci refers to, okay? Fibonacci is this tool right here. I'm going to grab my drawing tools up here. Fibonacci is a sequence and it's a ratio of numbers found in nature. It's part of the Fibonacci sequence of numbers, and it is by far the most amazing set of numbers in the universe. It is found everywhere in nature, guys. You can find the Fibonacci's literally everywhere in nature, ranging from the way our bodies are actually shaped, from our navel to our. I forgot exactly how it is, but sorry. Let's talk about the golden ratio first of all. Okay, the Fibonacci numbers, they actually form a set of ratios, okay? And in these Fibonacci numbers, there's this one golden ratio, and the ratio is called 618, if you see it right here, okay? The 618 Fibonacci ratio. This is the most beautiful number in the universe. I kid you not, okay? This ratio is actually found everywhere in the universe, ranging from the way the galaxies are actually shaped and helixed around each other, to the way our genes and our DNA is actually helixed in a coil, to the way seashells are shaped as well, to the way sand is actually shaped, to the way architects design buildings, to the way our bodies are proportional to each other. So we find the Fibonacci ratio, especially the golden ratio, 618, everywhere in the universe. And the good news is it's actually found in charts as well. This is why we're always going to hear people talk about the Fibonacci retracement level, which we're going to go over in very high detail in another video. So let's keep going here and talk more about things here. So here they're talking about an ascending channel, right? They're talking about an ascending channel just to get some terminologies out of the way. So this is what an ascending channel is, guys. An ascending channel is where the price tends to move upwards in a channel like this, okay? I know that they're not just talking about indicators, but we're going to talk about a lot of different terminologies and also about these different indicators in here as well. So this is an ascending channel where it's moving upwards. What do you guys think a descending channel is? Yeah, if you guys actually said that this was actually a channel that's moving downwards like that, that's exactly what it is, right? This is a descending channel where the price tends to move in a line like that. So it's actually bounded by a resistance, right? So a resistance doesn't always have to be horizontal, right? It can also be sloped like that. So this is the ceiling, right? This is the floor where it's actually coming down this particular way. And this right here is actually the ceiling where it's coming down just like that, okay? So let's get into some even more terminology about what they're talking about. So now They're just talking more about the same things there, right? So now let's go down even more here. The hourly MACD is placed nicely in the bullish zone, right? So what are they talking about when it refers to the MACD? So the MACD refers to the moving average convergence divergence, okay? It's actually this top one right there. So the MACD, in very brief detail, what it does is it refers to the moving average convergence divergence. And we use a term called bullishly diverging, bullishly converging, right? Those are kind of the terms that we use quite often. Is it converging? Is it moving closer to each other? Is it bullishly diverging, right? So, for example, on the MACD here, what it shows you are a few things just to give you guys a very basic detail of it, right? It shows you two lines right here. One is red, okay? One is red, one is blue. One is called the 12 fast line, and the other one's called the 26 fast line, okay? So what this refers to, which we're going to go over in very high detail, if you guys just take a look at here, this is just more so an introduction class. Lesson 13 is what is the moving average indicator? And we're going to go over that in very, very, very high detail because we need to go over moving averages before you guys have an idea on what this is. So the moving average, there are many different types of indicators, first of all, okay? There's something called a lagging indicator, and there's ones that are real-time indicators, right? So when you think of something like the MACD, what it does is it takes the information from the past, right? And it takes an average of it. That's why it's called the moving average convergence divergence. If that makes sense, right? That makes a lot of sense. So one, for example, for this one here, will take 12 of the past candles and give you an average. And the other one will take 26 of the past candles and actually give you an average. Okay, that. I'm sure that makes very much so sense. So one will take a smaller sample data, one will take a bigger sample data. So you can imagine the one that takes a bigger sample data, it doesn't move around nearly as much, right? So why is this important? It's important because it gives you an average sample of the price history. So it gives you a sample of the price action and what is actually happening. And also in the MACD, it gives you a very, very nice histogram. If you guys see this right here, right? So just imagine for a moment, this histogram, it dictates how much and where it's actually moving. So if you see this right here on the negative side, right? This is on the negative side, then clearly what we're seeing is that it's going down, right? But if it's actually going upwards, let's say from here, right? From here, from down, and it's going upwards, right? Then this must mean that the price is also going up. So they correlate with each other, which we're going to go over in super high detail once again in those next lessons. So another really important technical indicator that's talked about often is called the relative strength index, right? So when I first started out trading, I would actually go to these sites and I wouldn't know what they were talking about. And after getting frustrated, I finally started to learn about what they were talking about, okay? So when they say something like the MACD is placed nicely, excuse me there, nicely in the bullish zone, they're basically referring to how this MACD is on the positive side of this center line right there, okay? The center line is 0. If it's on the higher side, on the positive side, that means that it's more bullish, generally speaking. And then they're also talking about the RSI right here, right? The RSI is currently correcting lower from the 70 level. So RSI is called the relative strength index, and that is actually a gauge of the momentum in the market and how much strength there is. So there are two types of indicators, like I mentioned. One is called a lagging indicator, and the other one is a real-time indicator. Okay, the lagging indicator is not as reliable because it's taking the previous sample as an average, right? And because it's taking it as an average, a lot of the times when it actually happened already, it's a little bit too late because it's a lagging indicator. Whereas some other ones, like the relative strength index, and the histogram, which is one of my favorites of all time, right? It tells us really well when it's starting to level off. The histogram is a really good representation with the RSI of real-time indicators that gives us a real-time gauge of what is happening in the market in real time. It's not lagging, right? So the RSI, it's going to flow up and down from a number between 0 and 100, okay? 0 and 100. And as it goes up and down, it'll give you a really good gauge of what is happening in the market and how much strength there is. So if it goes well below 30, for example, or generally regarding under 30, that would be considered as oversold, okay? Oversold. Remember that under 30 is oversold. And there are these lines right here that will give you a really good idea of where they are. And over 70 usually means that it's overbought. And because it's doing a lot of these calculations, right, these mathematical calculations, it doesn't always mean that when it is overbought, over 70, it will reverse. And it doesn't always mean that when it's under 70, which means that it's oversold, that it's actually going to bounce upwards. So once again, just because it's oversold under 30, it doesn't mean that it's going to bounce up. And just because it's overbought above 70, it does not mean that it's going to come down. It just means that it's reaching to some levels where there's a higher probability of it reversing very soon, or yeah, basically that's what it means, right? There's a good chance that it's going to reverse the other way soon, because nothing will stay overbought for too long and oversold for too long as well. So what are some other indicators that people use, right? They'll use things such as moving averages as well right here. So there's the moving average convergence divergence right over here. And then there's also the moving average on these lines. Now, personally myself, I use 8, I use 13, I use 21, and I use 55, and I use the 100 moving average. Those are the 5 indicators that I actually use. And just so you guys know, right? You actually can't have all of these indicators that I have on my screen in the basic version of TradingView, okay? You need to have the Pro version, but the only reason I have it is because I bought the Pro version for a few months, right? And it actually just left my indicators on there. If you have a basic TradingView, you can actually only have I think 4 indicators. Well, I have 1, 2, and then I've got my 5 here, so that's 7, and I've got my volume, so that's 8, right? But I actually think you can only have about 4. So if you guys are interested in these strategies, I might recommend just paying for it for 1 month, right? Just pay for it for 1 month, and then after you pay for it for 1 month, yeah, you'll have it, right? Like I honestly, I think I got it for a few months. I don't even remember, but I had it like one time. I bought like a prepaid credit card, right? This was like a year ago or something. I bought a prepaid credit card, and then just to get the trial, honestly, just to get the trial, and then I never paid for it for like a year, but it kept all my indicators on there. So just to kind of give you guys, I don't know, a little shortcut or something, if that would help you guys out there. You don't have to keep it. It's not really necessary until you get the indicators, and hey, it's good enough, right? I think that's just kind of like a bug with TradingView, where if you get the indicators on even a trial account, like you put on your credit card, you get a trial account, get all the indicators on there, and then you just never renew it, and you actually get the indicators for life. So it's kind of a cool thing, right? So yeah, the moving averages, I keep them on here, and these are actually all Fibonacci numbers, okay? They're all Fibonacci numbers, and it's part of the Fibonacci numbers ratios that will actually form, things like the golden ratio, for example, okay? And then these moving averages, but for example, the 200 moving average, okay, right here, what that'll do on whatever time frame I'm on is it'll actually take the past 200 candles and form an average line of the price action. Whereas the 55 moving average will take a sample of just the 55 candles prior to that, and then it will form a line. That's why you'll see things like the 100 moving average not moving nearly as much, but you see things like the 8 moving average moving a lot more, right? So these are kind of the indicators that I use. So we've covered basically the MACD. We've covered, right, the RSI as well, which are very common indicators. We've covered moving averages as well. Now, I personally don't use Ichimoku clouds. I personally don't use Bollinger Bands. I don't use stochastic RSI. There's a lot of indicators out there, guys. What I would recommend for you guys to do is to maybe even read up more on some indicators that you might like, right? And then you kind of just specialize in a very set amount of indicators. And guys, this is what I use. This is what generates me a very good fortune. I'm very happy with the profits that I have made using these specific indicators, right? You don't have to use every, guys. You really don't, right? There's so many out there. Like look at the indicators over here. Look at all these indicators that there are, okay? There's so many. Like we're talking about like a ridiculous amount of indicators, and I personally don't care for a lot of them at all. Like this is ridiculous how many indicators there are, right? So, yeah. I mean, there's some really good ones on here, but you know what? I personally don't need them whatsoever. Like I'm really happy with just the indicators that I use, and I would recommend that you guys honestly just stick to these indicators. It's what's used in every single day language that when you watch technical analysis, and it's going to give you a really good way to master specific indicators. If there's some other that you might like to use, I might recommend Bollinger Bands. That's spelled Bollinger. And then there's also Ichimoku clouds, right? So these are some other ones here, Bollinger Bands, right? And then there's also Ichimoku clouds that some people use as well, right? So those are some of the other common ones. So once again, just to summarize quickly, technical indicators are used because they tend to evaluate the past, right? It gives you data from the past so you can anticipate what the future can do. And that's the importance of technical indicators. It's kind of a tool that we use that can assist us in evaluating the price action and predicting it in the future. And also remember that as a technical analyst, we firmly believe that all history of the past, the present, and possibly the future, they're all reflected in the charts. And we use the past data to anticipate and guess and predict based on probabilities. Hopefully, our probability is higher of what the future can actually do. So make sure you guys understand that some people will say that technical analysis is just the devil. Like it's horrible. Never ever use it. Never trust it, right? And only trust by fundamental analysis, right? For example, Warren Buffett. Okay, Warren Buffett, what he said was that he's never really used, technical analysis, and he's always been the greatest fundamental investor of all time, and that's all that he's ever based off of, right? And always remember as well that we're not going to catch every single trade, okay, guys? We're only going to catch some of them. And what technical analysis allows us to do is try to spot much more than we've actually missed. And Warren Buffett has also said that, they asked him, how did you miss Google and Amazon, right? Actually, he missed Google, Amazon, and Facebook, the big three there, Google, Amazon, and Facebook. They asked him, how did you actually miss all of these three? And you know what he said? He said, it's not about catching them all. It's about making sure that we spot and catch only some of them because we can never catch them all. So make sure you guys understand that these technical indicators, they're here to assist us and give us a general guideline of where this price action can actually go. But they're not going to actually, be our bread and butter in terms of, we rely on them 1,000%. What we try to look for, guys, is we try to look for something called called confluence. Okay, confluence will actually give us a way to find a higher probability of something actually happening. If we find a higher probability of something actually happening, that's basically by taking a lot of different factors and combining them. For example, we might say, oh wow, there's a lot of volume here. Oh wow, the RSI looks like it's bouncing up. Oh wow, the MACD is actually crossing over. Wow, this is also a really good candle, right? So we say, oh wow, okay, MACD is crossing over, RSI, there's volume, it's a good candle. That's what we call confluence, where we're finding a lot of different reasons for leaning towards one specific way, where it gives us a higher probability to make this trade, right? So that's why we use technical indicators. We use it to find confluence, to find and give us a reason to have a higher probability and a reason for entering this trade. So I hope that you guys have enjoyed this lesson so far. It's to give you just a basic and general idea of what technical indicators are and why they're important. But I think that even if you guys are beginners or not even beginners and you're even in intermediate, I know for a fact that if you guys have invested in my particular class, that you're still going to take a lot away from these videos because it's the philosophy and the psychology behind everything that I'm saying that will make you become a successful trader. I don't just focus, guys, on charts. I don't just focus on indicators. I focus on the whole 9 yards, right? I make sure that you guys understand this human psychology and the philosophy behind trading and how everything comes together. Because when you actually get the whole big picture of everything, right, it can be compressed down so you can put a magnifying glass over it as well and analyze it in very high detail. So I hope you guys have actually thoroughly enjoyed this class. This will conclude our lesson number 7 of going over the importance of technical indicators, the difference between fundamental analysis and also technical analysis, and how we use technical indicators combined with other factors to find confluence, which is basically more reasons to enter a trade to have a higher probability of being successful. So thank you very much, guys, for joining me for lesson 7. It's been a pleasure being your instructor for this particular lesson, and I really hope to look forward to see you guys for lesson number 8. And for lesson number 8, guys, we're going to be covering finally how to read charts, how to analyze candlesticks, how to read price action. And this is going to be a very fun class, so I look forward to seeing you guys all there. And thank you once again for being a part of my class, and thank you for all the love and the support you've given me. I look forward to seeing you guys for lesson number 8. Have yourselves a great day. Bye now.